Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Boeing also at risk of losing its investment-grade credit rating as the plane maker faces the prospect of a drawn-out strike by workers that will further disrupt production and cash flow. Carol, factory workers walking off the job for the first time in 16 years. They halted manufacturing across the Seattle hub of Boeing after members of its largest union voted overwhelmingly to reject a contract offer and go on strike. I got to tell you, George Ferguson, earlier this week when you were out, he said, this negotiation is by no means over at this point.
All right, so that's why we wanted to check in once again with him. Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson does join us from New Jersey. George, first of all, we've been, anticipating this strike, long versus short. How important is that?
So I think very important to Boeing. I'm sure the machinists as well, but to Boeing, I think more so, right? A long strike really, I think, runs the risk of hurting the supply chain even more. So I think as Boeing gets into this strike, they have to really think about cash on their balance sheet. We think they're likely to burn $3.5 billion worth of cash in 3Q, probably putting them close to about $9 billion of cash in the balance sheet.
Wow.
That's about the bottom of, I think, what they need to run the company. And so I think, if they don't get workers back on lines, building airplanes, bringing cash in the door, they'll definitely have to go to the capital markets. Then they got to figure it out, right? They want to go to the debt markets. I think the rating agencies wouldn't like that for sure, right? That might push them into less than investment grade if they do that. Equity investors never like being diluted. So the cash position and some of those considerations Boeing's back is sort of really against the wall here.
Well, talk to us about this. Moody's, this is about two hours ago or so. Moody's says Boeing's ratings may be cut to junk. With a company that already, you just walked us through the Boeing balance sheet, already stressed, what would that mean if it was cut to junk? And especially if it sounds like it could need to tap the capital markets, debt markets in particular.
Yeah, so I'm not the credit analyst on Boeing, but I'll tell you that, I've spent time in credit teams at BlackRock and such, so I don't know the exact spread they would get. I'd have to go play around with that, but it'll mean higher spreads, right? Which means higher interest rates for raising money at Boeing. Plus, you get into this bad game where when a company goes less than investment grade, there are some funds that can't hold less than investment grade paper, right? And sometimes they'll end up having to get that, put that paper on the market. That doesn't help prices of the debt either. So two things I think they really want to be avoiding at Boeing.
What about reputational damage here? We've talked a lot about financial damage, but what about reputational damage? I mean, at the end of the day, this is I think it's fair to say a lot of people would call this a duopoly, George. Is the company at risk from a customer perspective at all, or are these customers locked in? Because, Airbus is sold out of the A320 till the end of the decade.
Yeah, I think that makes it hard, right, for people to move, for customers to move. And we continue to watch deliveries every single month. And there's still a lot of core customers. We even looked at the expected deliveries till the end of the year, and it's core customers that are taking airplanes. It's Ryanair, it's Southwest, it's United Airlines, it's Alaska, it's Gol out of Brazil, it's Copa out of Panama. All good airlines. I think going less than investment grade doesn't worry them. I think they're just watching closely to see how stable Boeing is, if they can improve manufacturing, improve quality. I think that alone will keep them coming back to Boeing, like you said, due to the long stretch for A320s, due to the cost of changing airplane types in those fleets. Lots of those fleets are pure fleets, so you save money on pilot training, you save money on your maintenance pools and things like that. But I think, this is not a road that Boeing wants to keep going down. Clearly, right, when you go less than investment grade, it means risks are rising of a default. U.S. government probably doesn't want to see that. Investors don't want to see that. That's the challenge, right? Is that you got to stem it at some point.
I'm not sure if we've showed this already to viewers, and for those folks are listening on radio as well, but Boeing's revenues, we've got a chart and it just shows how they have been declining, right? And moving lower. And I understand the reasons why. And we're bringing up the chart and you're seeing, the last couple of quarters, this is not a trend line that you want to see. It's not a healthy trend line. What does it take to turn it around at this point?
Yeah, I mean, I think that they have in place what they need to turn it around, right? And that was after the Alaska door problem, right? They really needed to get the FAA comfortable that they were improving manufacturing, improving quality. They're going to go in and buy Spirit Aerosystems, major supplier of the fuselage in the 737. And I should step back and say, look, the 737 is, right, it's really, I think, the most critical component of this turnaround because that's the money maker, the profit generator at the company. And that's where they've had their problems, right? And they've got a plan in place to go buy Spirit Aerosystems. And now it's a function of keeping that supply chain healthy enough and starting to increase the components they build so Boeing can pull those into the factory, build more airplanes, push them out the door, and generate revenue and cash flow. Boeing is sitting, though, on $85 billion of inventory right now because they keep taking from suppliers at a 31 rate, and they're not delivering at a 31 rate. And that becomes a problem, too.
Hey, George, we only have like 10 seconds left here, but back to the strike, what's a timeline that investors should understand here? How long do you think it'll take to get resolved?
I really think this is going to be resolved in a couple of weeks to a month. I just don't see Boeing able to let it go on much longer than that. I think they just have to increase the salary, increases, and they're going to have to. I think the union's going to want more guarantees on an airplane. They'll want to make the next 737.
Yeah, the CFO already talking about the goal of building 38 737 MAX jets a month by year and will take longer due to the workers' strike. So we know that there's already some delays. George Ferguson, thank you. As always, have a great weekend.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
United Airlines announcing a deal for SpaceX's Starlink to power its in-flight Wi-Fi, becoming the first major U.S. carrier to use the satellite system and giving the Elon Musk-run company a marquee customer. Now, the telecom sector and how we stay connected, it really continues to evolve, gets disrupted, which brings us to the tiny telecom company that wants to compete with SpaceX. Check this out, everybody. It has become one of the hottest stocks in the world this year after soaring from $2 to nearly $30 in just 6 months. So, Tim, let's get to the interview.
It's up another 13% as we speak today.
Yeah.
Joining us from Boston, we've got Scott Wisniewski, president of the $8.1 billion market cap wireless telecom company, AST SpaceMobile, the company building a global cellular broadband network in space to operate directly with standard, unmodified mobile devices. Scott, welcome to Bloomberg Businessweek. Good to have you. Explain for the layperson how this technology works and how it's different from typical 5G technology that they'd get from a typical wireless operator that sends them the signal on the ground.
Well, thank you for having us today. Our technology is space-based. It's in low Earth orbit, and it functions as a sort of replacement for a cell tower on the ground. It uses today's wireless frequencies, today's cell phones, and it's backwards compatible with 5 billion plus phones that we use today around the world. So you are a user. Our partners in the U.S. are AT&T and Verizon. If you're a customer of one of them, have a plan with them, the phone in your pocket in the future will be able to access our satellite network in space. And so we have the technology and the patents to make that work in a way that was never contemplated before because space is so far away. But we have the technology in orbit. We just launched 5 satellites this week. And the size of our satellites allow us to connect to regular, small, low-powered cell phones.
In your view, Scott, does this replace cell phone towers? Should companies like American Tower be concerned?
Well, that's an excellent question and one we often get. But American Tower has actually invested in us twice. So we're designed to supplement cellular networks on the ground. Because of physics, terrestrial networks will always be best served people that are nearby. Our towers in the sky are over 500 miles away. So we are a supplemental coverage. When your phone is quiet and has no coverage or weak coverage, that's when we come in. And it makes a lot of sense for us because we have the ability to cover half the country with only one satellite at a time. So it's a very efficient way for operators like AT&T and Verizon and the other 45 around the world that we have agreements with, who collectively have over 2.8 billion subscribers. So we're really an extension of their networks. And we were designed from the beginning to complement their networks, work with their existing technology, and work with a phone in your pocket without you even knowing it.
All right, so supplementing, complementing, but at some point, couldn't it be that what you do be comprehensive? I mean, I think about Starlink, and they certainly seem to want to be comprehensive in terms of their capabilities. But I'm curious for you guys, American Tower might be joining up with you guys just to be prepared for kind of what's next and what might be the future rather than what they are doing currently.
Yeah, it's a really interesting question, and it gets back to what the cell companies and the tower companies have created over the last couple decades, which is an incredible network that covers most of the population. There are spots that are missed, but today's terrestrial networks are very good. So we'll never replace that. It's just a question of physics. Our satellites are the largest ever put into low Earth orbit commercially. It's over 700 square foot each. We've been flying one for the last 2 years, and we just launched 5 more yesterday.
Right.
So we are going to be able to provide a lot of coverage from a satellite perspective.
What's a lot? What's a lot? When you think about people who are using, would need to tap into the service, 50%, 60%, 70%? What's a lot?
Well, we have the ability, you may be familiar with other satellite services that are starting to pop up on phones today. And those tend to be SOS, emergency, maybe some limited texting. We've tested 4G, 5G speeds to the phone over the last year, and that was a big part of the technical demonstrations we did last year with our partners AT&T and Vodafone in Europe and Rakuten in Japan. And so we've done over 20 megabits per second to the phone. But this is a supplement. Think about extra gigabytes to the phone, not your base package typically. This is an add-on for when you're moving in and out of coverage as you live, work, and travel. Or importantly, in the developing world, we have the ability to help really put a dent in the 2.5 billion people who don't have any cellular broadband access today. So it's really meant to be a supplement, but it is a large supplement, and that's why it's a cellular broadband network.
Scott, we said you want to compete with SpaceX, but you also rely on SpaceX. For example, yesterday you launched 5 commercial satellites atop a SpaceX Falcon 9 rocket. Explain your relationship with SpaceX here. And remember, SpaceX owns Starlink, so that's why we're talking about this.
That's right. And so what we're doing is very different from what Starlink and others have historically done, which is talking to a dish. We're standing up a brand new vertical within satellite telecommunications of going directly to the phone. And it's all about working with the wireless carriers globally. So we're not a closed system. We work with today's standard phones, which have been standardized globally and are really incredible, and we all benefit from them every day. So we're standing up a new vertical within satellite telecommunications that really looks and feels like a wireless network. And to get to orbit, to build that network, we're actually vertically integrated. We're based in Texas. We build our own satellites. It's an incredible core competency of ours and very, very important to building any low Earth orbit network. So we build our satellites ourselves. And then in terms of launching that network, we plan to work with all the major launch providers globally.
What's the toughest part of what you are doing right now? Do you have enough capital to do what you need? Obviously, investors are pretty excited about what you're doing. What's the difficulties?
Yeah, the unlock for us this year was really started in January when we announced investment from AT&T, Vodafone, and Google, and then we followed that up with investment by Verizon in May. And so for us, we're publicly traded on the NASDAQ. We've raised over $1.5 billion. We feel very good about our capitalization to achieve our near-term objectives. And so we feel good about capital. We feel great about the technology with the demonstrations we've done over the last 2 years with our in-orbit satellite.
Yeah.
And for us, it's really a race against time. We're building our satellite network as fast as we can. And our partners are very excited. And based on the hundreds of investors who traveled to watch our launch this week at 5 a.m. in the morning, they're very excited as well. I think there's a real strong latent demand for our service. And it comes from the fact that when our phone does not work, we feel it very heavy in our pocket.
Hey,
and so
super quick, 10 seconds. Do you go it alone? Is that the plan? Or would you be open to linking up with someone real quickly?
Well, we're already partnered with many wireless operators around.
You know what I mean.
So we that's all we do is we need them. So.
All right, gonna leave it there. Look forward to future conversations. Scott Wisniewski, he's president of AST SpaceMobile, joining us.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, we knew we had to do this story, no doubt about it. It is among the most read on the Bloomberg terminal. It's also because it's someone associated with former President Donald Trump and key in Trump's thoughts when it comes to crypto. All right, we couldn't say it enough today. We want to get to the dirtbag of the internet. We are going to ask about that kind of name, if you will. Is the reporter who's been looking into him, writing about him. It is Zeke Faux. He's Bloomberg News financial investigations reporter, author of Number Go Up, Inside Crypto's Wild Rise and Staggering Fall. So he follows the crypto world very, very closely. Zeke is with us in New York City. All right. Zeke, who is Chase Hero, or should we say Chase Hero, which is kind of in the story?
It is pronounced
Hero.
Yes, it is pronounced Hero, even though he spells it with 2 R's. And he's the man behind World Liberty Financial, which, just this in itself is kind of shocking. This is a crypto startup that the Trumps are promoting a couple months before the election. And Donald Trump is going to unveil all the details he promises in a live stream on Monday. So I decided to dig into this business partner. And like you said, he calls himself the dirtbag of the internet. And that's just the beginning of the story.
Just what every presidential candidate wants to be connected with, the dirtbag of the internet.
Well, what do we know about Trump's connection to this? What role does he play in it? What role do his sons play in it? How connected is he to it?
So here's the story from what I've heard, is that Hero, who until recently was running a $149 a month get-rich-quick class, and he's a total unknown in the crypto world, but through a friend of Trump's, he got connected to the Trumps, and Hero had a DeFi venture called Doe. Again, just one of countless crypto startups that seem to have failed to attract much trading at all. It's a place to borrow and lend, but just only attracted a few $1 million before getting hacked. And Hero pitched them on starting a new venture that would be similar to Doe, but it's called World Liberty. And I obtained a white paper for it. The Donald Trump is at the top of the list of the people involved. His sons, Donald Trump Jr. and Eric, are Web3 ambassadors. And even Barron Trump, his 18-year-old son, who just started his freshman year at NYU, is listed as a DeFi visionary. So the Trump family seems to be, deeply connected to this. But from what I've heard, it's Hero and his longtime friend and business partner, Zachary Folkman, who used to teach pickup artist classes, like how to teach men how to hit on women. These are the brains of the operation.
I know we're having fun with this. But I feel like the crypto world. We have to be careful. We've seen, when things can go astray. What do, the respected folks within the crypto world, do they know this person? Do they have views on this person?
Right. Crypto, this is an industry where, it counts as a innovative startup if you just sell coins with a picture of a dog or a cat on them or something like that. Mm-hmm. And even in this world, crypto investors were like, we never heard of this guy. This seems super dubious. People were really excited because Donald Trump, who used to call Bitcoin a scam, he changed his position and he said he's going to fire Gary Gensler, the SEC chairman, who's the enemy of the industry, and he's going to push for new regulations that'll help crypto. So everybody liked that. And now they're like, ooh, you're going to do your own coin? No, this is a bad look. That was the consensus of the dozen or so crypto investors that I talked to.
What are they actually selling, though, Zeke? And when we look at Trump's history in business, obviously he's known for real estate, but there have been many failed businesses too. Trump Airlines, Trump Steaks, Trump University.
Casinos.
Trump Vodka, some of the casinos. Mm-hmm. Yes, no question there. We know what he was selling with those, though. That it was in the name. What is he actually selling with this project?
So the details that he announces may change, but according to the white paper, this is going to be like a platform for borrowing and lending, and it's going to have its own token, also called World Liberty, I believe. And the token has some sort of use within the platform. But the way this works in crypto often is that the startup is basically an excuse to sell the token. And you're hoping that the celebrities associated with the project are famous and that people will want to buy the token because of that. And Trump certainly is very famous. And we have a great example. Trump has a stock, Trump Media and Technology, that owns a social network called Truth Social. And the network has almost zero revenue, but the stock is worth something like $3 billion. So you could see how you might want to replicate that formula in the crypto world.
So to kind of build on Tim's question, Zeke, I mean, is it right about making money for the Trump family? Is it about, it's an election year, right? And the days are ticking down to the election outcome come November. Is it a way for Donald Trump to reach out to, a sector of the electorate that might find this interesting and engaging? Because he's going on podcasts that certainly maybe play to a certain audience.
Yes. I mean, if he's trying to do this as a way to reach out to the crypto world, from the feedback I'm getting, this was a mistake. I mean, and what they said is it seems more like a cash grab. And one crypto investor I spoke to said that it felt like almost Trump was asking for a favor in return after promising lighter regulations. And that's why, experts that I talked to said that it's a conflict of interest for a presidential candidate or a future president to be promoting a private company in an industry where they have a big say in how it's regulated.
Zeke, you kind of joined us at the perfect time because there's actually some breaking news around Trump Media and Technology, ticker DJT. Shares are halted for volatility after rising 13% because as Donald Trump was giving remarks in California, he said he will not sell shares of Trump Media and Technology. There was concern that as the lockup period expires next week, he would start unloading shares. He is the largest shareholder of the company, but he did say at a press conference, Carol, to reporters that he will not sell Trump Media Group shares. So it does show the power of the president to, or the former president, excuse me, Republican presidential candidate. What he says moves stocks. What he says can sell or cause people, to buy or sell.
Well, absolutely. And we should point out that earlier in the week, right, coming off of the debate, we saw the day after the debate, shares of Trump Media and Technology down about 10%, followed by the following day, another 3% decline. So him coming in and saying, I'm not selling, providing some support. But nonetheless, the stock is traded. All right. So where do we go from here? I mean, were you able to talk to Chase? Were you able to get anything from the company about what they are doing? Because it just feels like there's lots of questions, maybe not so much transparency.
Yeah, Chase did not give me an interview, and the company said that my story and my questions about it seem to be pointing in a certain direction that they disagree with, and that time will show that this is truly an innovative platform. But I just look at what Chase himself has said in past videos about crypto. I mean, I can't even read most of this on the air, but he had said that regulators should kick people like him out of the industry. He said you could sell anything if the story's right. I mean, it just seems, it's very surprising to me that that Trump would be starting a venture with this guy so close to the election.
It is a little puzzling given the timing. But you also write in the story about the former president's conversion to crypto believer over the last couple of years.
Yeah, so this was also shocking to me. In July, he flew to Nashville and gave a big speech at the Bitcoin conference. And in this speech, he repeated like the crypto industry's wish list of things. And he said he'd fire Gary Gensler. He said he would establish a national strategic stockpile of Bitcoins. I mean, it was a complete turnaround from what he thought about crypto before. And the crypto industry, in return or in response, held a fundraiser at this conference and raised what they said was $25 million for his campaign. And, it sort of seemed like that was the end of it. And then him and his son started promoting this world liberty. And they're saying this is going to change the world of finance. It's going to take on the big banks. And that's why I decided to look into the background of the people involved, see if they had the kind of experience that would let them do that. And it seems very doubtful.
All right. So Monday, just to wrap up, 30 seconds here. So when the former president, Donald Trump, presents or makes some comments about this, what are you looking out for? What's kind of key that you think our audience should listen for?
Well, one thing I'll be watching for is will they actually be selling a new coin? Mm-hmm. You can start a crypto app without it having its own coin. And so if it doesn't have its own coin, then it's less of a way to make quick money. If they are selling a new coin, I want to know the details of that coin, how it works, how people are going to buy it, because it also, this model of initial coin offerings of selling new coins, this has gotten people into a lot of trouble with the SEC in the past. Mm-hmm. So if he's going to go and do that, it could set up a conflict with Gary Gensler in the near future over his own venture.
All right, going to leave it there. Unbelievable. Interesting stuff, though. Great read, as we said, among the most read. Zeke Faux, Bloomberg News financial investigations reporter. He's also author of Number Go Up, Inside Crypto's Wild Rise and Staggering Fall, joining us in New York City.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
What comes to mind, Carol, when you hear Evite?
Kids' birthday parties?
Yeah.
Or just any kind of event.
I think a lot of people remember it as like the OG in online invitations. Before Facebook events, before paperless posts, there was Evite. The company traces its roots back to a different era in the internet.
Wow.
We're talking 1998, okay?
That's a while ago.
Here's some context. Mark Zuckerberg was barely a teenager then.
Okay.
The best-selling single of the year, My Heart Will Go On, by Celine Dion.
Is that when the Titanic came out?
I think so, yeah.
Yeah,
that would make sense, right?
All right. It's changed hands, though, several times, right, since then?
Yeah, IAC owned it. So did the John Malone-founded Liberty Media, the company that has a huge stake in F1 and Live Nation Entertainment. Now it's privately owned, and we got with us the president of Evite, Anda Faux, joins us here on Bloomberg Businessweek. Anda, how are you?
I'm good. How are you? I love that intro. It gave me a big smile hearing that.
Well, I do think that Evite is like kind of the way people use Kleenex, or Kleenex to refer to a tissue. It's like the way you would describe the concept of receiving an invitation that is not in the traditional way. Help us understand, though, how the business has changed in the last 26 years. I'm a little confused. I know your folks told us that it recently celebrated its first profitable year, but I did find an article by the Chamber of Commerce that said back a little after the pandemic in 2021, it had its first profitable year. Help us understand what's going on.
Yeah, so you mentioned earlier that it's changed hands a couple times and it's now private. So since we gone private, we made dramatic changes to Evite, and that's when I came on board. And to name a few of the dramatic changes we did, the first of which was we have a now all-female product-led team, which gives us a competitive edge. As Carol mentioned, most of our users are mom throwing kids' birthday parties. So with a female product-led team, we're all on the ground and we know what's happening. We also rebuilt and modernized our core invitation product a couple years ago. And those two things combined is really what drove all the changes that are happening at Evite, our revenue growth, and on top of that, profitability. We, a couple years ago, kind of eked out profitability, but at this point, you're talking about double-digit margins in our profit line now. So that's what's really changed with Evite, and we're so excited about what's happening.
How did you do it? Because you guys have moved away from being an ad-driven model, which is so much a part of the online universe. So what is the profitability model, and what drives revenues?
We're now thinking about the number one thesis we have is how can we be helpful to hosts? How can we just help the users throw their party and throw it well? And so with that thesis, we are now thinking about our product from a user experience standpoint. In the past, the past business model, we're thinking about ad revenue. And when you think about ad revenue, it's a little bit contradictory to think about the user experience. And because, we're rethinking how our business model works, we are now prioritizing the host. And because we do that, the host is loving it. So now our number one driver of revenue is really from our premium experience. And the more we prioritize our hosts, the more we build features that she wants, the more profitable that we become. And it's really working out for us.
Tell me what a premium experience is when it comes to Evite. Help me out here.
Yeah, a premium experience is about if you want to throw a kid's thematic birthday party, we are going to help you set the vibe for that thematic birthday party. Say the princess birthday party. We're going to give you top of the line trending invitations. It'll come with matching background stamps and stickers to wow your guests about what the theme is going to become. Okay. The second part of the premium experience is we're going to give you control and help you get more RSVPs. We all know when you invite guests to your party, a lot of them will look at your invitation but never respond. What we do with the premium experience is we found out the optimal time to actually message your guests. We keep on nagging them for you so you don't have to. And we have proven that with the premium experience, you actually get more guests because you're paying for this optimization and this customization of your entire event.
Carol, do you ever throw parties and hope nobody comes?
Not for kids.
No, not for kids, but I'm just thinking I have a friend who threw
This is why I love Tim Stenovec.
I have a friend who threw, I probably shouldn't say this, but I have a friend who threw a big summer party one year for his birthday, and it was like the best thing ever. And it was so fun. And he's like, I'm going to do this every year. He did it again last summer, and it barely started raining. And what he did was he sent out a note to everybody and said, party's canceled to everybody, okay? But then he
on the day of,
because it started raining. But then he sent a note to like 10 people and was like, it's not actually canceled. I just didn't want to have a huge party. I just want you guys to show up.
Oh, funny.
It was awesome. Great. It was a great party.
Did you get the invitation to come back?
I did. I got the invitation to come back. There was way too much food and booze because it was like supposed to be a party for a ton of people. Anyway, just an aside. I'm sorry.
Yeah.
Unbelievable. All right, so remind us, so this change in your model, remind us again of the metrics. And we're Bloomberg and we say this all the time, but we do care. How has it moved the top line growth?
It has moved our top line growth dramatically. We are now more than 50% higher in revenue. I could say we are the highest.
From a year ago. From a year ago, what's that 50% jump?
From a year ago, from 2 years ago, we're over 100%. We're now at the highest level that we've ever been in our 26-year history. And we are now double digit in profitability. And we have never been that in our 26-year history. And what's even more exciting, I have to tell you guys, is I think that we're just in the tip of the iceberg of where Evite can become. You guys have already mentioned that when you think of digital invitations, you think about Evite. We are known for that space. And what we're trying to do now is think beyond invitations of how we could actually be an ecosystem for all the planning needs. Evite is so big that we have,
so like the Knot? Like, do you want to be like the Knot in terms of planning events for people?
We want to be bigger than the Knot. We can be where for any time you throw an event, we want to help you use all the tools that you normally would use elsewhere into our own ecosystem. From pre-planning tools, like if you want to question a group of guests that you want to invite, what's the best time to meet? We're going to build a tool to help you figure out how to do that. You could do your invitation with us. And what about during the party too? You want to message your guests, you want to post photos. We recently built out this ecosystem with our first new product that's not invitation exactly related. It's called Evite Sign-Up Sheets. Sign-up sheets are for the events when you really need volunteers. It's the fastest on the market right now and it's completely free, okay? It's great for events like if you have kids in elementary school, you need volunteers to sign up for classroom activities.
Right.
This is a great part.
Right.
It's great for sports when you need volunteers to bring snacks for the kids. And you know what's the most exciting part about this product that our team is super jazzed about? It's great for potlucks. Everybody throws them. We all love them. You need volunteers to bring dishes. But what we're noticing now is with the Gen Z generation, people are now we want to rebrand potlucks for this Gen Z TikTok generation because they're making it thematic.
All right.
It's not just,
No, I have to ask you before we go, because we're running out of time, got 30 seconds. In a world where we talk so much about AI and the importance of data, it sounds like you guys are getting a lot of information and very segmented about people who are interested in very specific things. Is the data play part of the revenue play? And forgive me, because we just have about 25 seconds.
The data play is all about how do we use that data to help our host. So we have a lot of data about who'd you invited in the past, who's viewed your invitation and who didn't RSVP yet. Who else have you partied with? That's how we think about our data. It's not to sell the information, but how do we become even more helpful to throw your next event?
All right, fun stuff.
Yes.
All right, well, look forward to checking in with you again. Anda Faux, she's president of Evite, joining us from, I believe, Manhattan Beach, California.
Sounds great.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive, say you crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, 18 minutes left in today's trading session. We are getting ready.
Friday.
I know.
Beetlejuice.
We are talking to one of the screenwriters later on, so we're kind of hyped up on that. Having said that, investors, quite a bounce back after last week's selling. So let's see what Carol Schleif has to say. She is back with us. She's Chief Investment Officer at BMO Family Office, joining us from Minneapolis. Good to have you back with us. So as we kidded with our Gina Martin Adams, Carol, earlier, the market taketh away last week and giveth back this week, having said that we've got a big Fed meeting. So I don't know, is there a clear strategy when it comes to the equity trade for you right now?
I think the clear strategy is similar one that's been involved for the last couple of years, and that's build durable portfolios that can dodge and weave and respond to any sort of markets that we get. Because while we had last week being rocky and this week being good, back in the beginning of August, we had Monday being bad and Tuesday being better. So building those portfolios, though, that give us the opportunity to participate both in fixed income markets, especially you've gotten paid nicely to be in those shorter term yields, but also to lean foot forward on growth, because we do think that from an intermediate and longer term standpoint, a lot of investors are underestimating how beneficial for the economy rate cuts will be.
Carol, I'm going to ask you the same question I've been asking folks all day, because we're seeing what could end up being, depending on what happens in the next 15 minutes or so, a really good week for stocks. Just a huge departure from what we saw last week for the S&P 500, the worst week going back to that regional banking crisis of 2023. What changed? What shifted?
I'm not sure anything macro shifted as much as, there really is just an adjustment and getting used to. People are focusing more on the Fed meeting next week. We're past earnings season. You had, depending on the camp you're in, you had nice meetings from Apple on Monday. You had a very eventful week, actually, all things considered. And I think most importantly, one of the things that is shifting is you're seeing a broadening in the markets, and that's really helped. You're seeing it because it's not just the Dow or the S&P leading, it's also in those in a concentration of the S&P, it's broadening out to the other 493 names, and especially in small cap as well.
Yeah, Russell's up about 4% this week, right? So you, does the Fed potentially change all of this next week?
I doubt the Fed will change that. You know, the early betting, what everyone's been looking at now is it 25 basis points? Is it 50 basis points? We really don't think in the context of the next 6 to 12 months it matters. You've got a lot of things markets still have to deal with. This week's been good, but we've also got a lot of volatility potential because this is spooky season after all, not just pumpkin spice season, but spooky season, where you've got September.
It is triskaidekaphobia, Friday the 13th today.
Yeah, exactly. But that's always been my lucky day. So, but the interesting thing is, though, is that you do have the potential for a lot of volatility. But we think once the Fed has the opportunity next week, and we would imagine they're going to be super careful in how they communicate that this is the start of a process. And that's what businesses are waiting for. If you go back and think through the messages that the individual Fed governors are saying and that they've come out with in the Beige Book, those companies are sitting on the sidelines waiting to get started with some of that M&A and build outs and infrastructure build. They've been waiting for 2 years because last year they were afraid that we were going to have recession.
Right.
And then when that didn't come, now they've been waiting for, I don't want to finance this week if the Fed's going to cut next week.
Right.
But once the Fed gets some clarity on that, once we get through the elections, because theoretically 2 months from today, most of what we don't know should have some clarity and some direction, and it'll allow people to get on with life.
Right. We know the direction now. Maybe the question is a little bit of how much in terms of the Fed cuts.
The speed.
This week. Hey, by the way, Taylor Swift, I think 13 is her lucky number as well.
It is?
Yeah, I believe it is.
I didn't know that.
I think she does.
That's right, because doesn't that have to do with Travis Kelce's jersey too?
No, well, but I think 13 has been her long number. It's been her favorite number for a long time.
Here, I thought we were talking.
Do you think she maybe picked him because his jersey was
Friday afternoon? Friday afternoon.
This is great. I love this. I had no idea about this.
She like releases, like she's very superstitious about a lot of stuff about when she releases things. My daughter isn't so into Taylor anymore, but she used to be, and so I got a lot of stuff. Hey, some different events. Apple's been out with a lot of news. NVIDIA this week, an earlier guest talking with our Abigail Doolittle, talking about NVIDIA, like how maybe that really helped shift some of the sentiment. NVIDIA's CEO, Jensen Huang, speaking at that Goldman Sachs conference this week, and we saw NVIDIA. It's really rallied, I think, something like 15% this week, but talking about customers, it's tough dealing with them because there's so much demand. They want more of their products and more of their chips. I don't know. Is there something in the tech narrative that's interesting for you?
I think the interesting thing in the tech narrative is unlike the first, when the internet first launched in 95 to 2000, where you had a lot of companies that were creating a lot of headlines that didn't have revenues and earnings. A lot of the companies that are dealing with this now not only have revenues and earnings, the spending is big. It needs to be big. There's been a lot of articles, especially in the last week or two, talking about how we have to rethink the whole tech pipeline in terms of where the processing gets done, how we create the juice for that processing. And it's one of the reasons why, the introduction on Monday, a lot of the AI processing has to happen on the computer, on the phone. So there's a lot of reasons to be optimistic, not just about the build out, but also about the use cases, because many of these companies have been dabbling in it behind the scenes for over a decade, and building those use cases out. And you're starting to see leverage in some of the most basic mundane tasks where AI walks along as an assistant, doesn't necessarily take our jobs away, but makes it so that we can go to the next level in thought process in these jobs.
Carol's. I wanted to tell you both that our amazing team has been doing some research about the number 13 and Taylor Swift, and I got some notes from our own Elizabeth Sedrin, who said sent me a story that has Taylor Swift telling MTV years ago, she was born on the 13th, she turned 13 on Friday the 13th, her first album went gold in 13 weeks, her first number one song had a 13-second intro. Every time I've won an award, I've been seated in either the 13th seat, the 13th row, the 13th section, or row M, which is the 13th letter.
You guys, I'm a little upset with you. Swifties know this. 89 is important.
I didn't know this. I'm sorry.
She is very, she's got numbers are a big thing in her world. Like when she releases things and so on and so forth.
No, the more you know.
Does that mean we're teeing up a great rest of the year here, September, Friday the 13th?
I don't know. You tell me.
We do hope so.
All right. Well, certainly the Bulls do. The Bears might think a little bit differently, but, we'll leave them for now. Have a great weekend. Carol Schleif, Chief Investment Officer at BMO Family Office, joining us from Minneapolis.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.